Welcome to IGCSE Accounting. This video will be focusing in terms of sources and recording of data, which is more focused in terms of trader, purchase, sales, purchase returns, and also some example of sales return. All right, let's start the content. Okay, what is trader? Trader is a business organization that aim to make profit from buying and selling the goods. There is no production take place. Okay, so for example, there are certain company the purchase and computer is for the business own use. The computer it become a asset. However, when the business actually is buying the computer as an inventory, which is later they will resell the computer to another business or individual, then the computer itself it become a inventory. This is the concept that this video trader is focusing on. All right, so let's look at one of the example of this kind of trader account. Right, looking at this account, what do you think of the value of inventory held by the business after 20th of June? Okay, in this example, the inventory of this company in 16th of June, there is a purchase of 2,000. It means current at 16th of June, that point of time, the company having an inventory which is value of 2,000. And at the point of 20th of June, something is happening. The business sold the inventory which is value of 2,000 on 20th of June of 2000. So it looks like the whole thing, there is no inventory because purchase of 2000 and then sell it off at 2000, all balanced. That means no more, zero remaining. Okay, so for this example, just you can, when if let's say this is one of the exam question, the answer is there is no inventory left at that point of time, which is 20th of June. If the exam question is asking you that at 18th of June, what is the inventory? You see, 18th of June is after purchase but before the sales. So 18th of June is the answer should be 2000 instead of 0. Okay, so I hope I make this very clear. All right, why do you think the inventory is not likely to be sold at the same amount as was paid off? This is something that we can discuss about, because normally in business we want to make profit, so the selling price normally is higher than the purchase price. Okay, what is purchase? Inventory bought by the business either is for immediate payment, normally either bank account paying, that means bank transfer, or cash, which is we pay cash to the seller, or on credit. On credit means that you don't want to pay now and the seller agrees that you temporarily own the money for a while, normally with certain terms that required. For example, the seller say that, yes, I'm okay that you don't pay me until 30 days later, something like that. That is what it means of on credit. Okay. And then in terms of sales, inventory sold by the business either for immediate payment or credit. It means you want to sell something from your business, not from your personal, it's from the business. Okay, it's either that you receive the money direct into your bank account, which is what we call immediate payment, or you are receiving cash into your business, which is the cash belong to your business, is called immediate payment too. Another possibility is you agree with the buyer saying that, yeah, I'm okay not to receive the money maybe 60 days down the road, it's on credit. All right, in business, there is a possibility that maybe something wrong with the purchase. So there is a return. That means you return the goods towards the seller. So the definition is inventory previously bought by the business returned to the original supplier. due to some problem with the inventory. And this one also known as return outwards. It means you purchase a good inward, right? And then when you return, it become outwards. Okay. And then same vice versa. When you purchase something, when you sell something, sales return, the inventory previously sold by the business and returned by the customer due to some problem with the inventory, also known as return inwards. So earlier, when you do the sales, the goods go out, right, to your buyer. And the buyer maybe some point of time decide to return the goods to you and you agree with that, you accept the goods, which is the inventory, and then it consider as inwards because the goods is coming back into your inventory inwards. Okay, let's look at some of the example and then we do some exercise in order for you to understand even better. Okay, for this particular case. Paying to debtor. On 12th of June, Melissa paid to Xin Yi a full amount owning from the business from the bank account. Enter this transaction to the appropriate double entry. Okay, earlier we do some exercise about we own some money from Xin Yi. So this is the case that, I showed the wrong example. This is the correct example for purchase inventory on credit. Sorry, ignore the pay to debtor method. All right, so purchase on inventory on credit. 4th of October, Hui San purchased a $250 inventory on credit from Jaden. Enter this transaction into the correct double entry account. Okay, let's have a look. So in this case, we do some purchase. Okay, how much is the purchase? The purchase is 250. And then when it happened, 4th of October. And then purchase from who? Is it paid by credit or immediate payment? It paid by it. So when it's paid by credit, you have to write who you're owning the money to, which is Jaden. And in this case, because you own the you don't pay immediately, Jaden, which is considered a liability to you. So, and when it's liability, remember earlier we mentioned the concept. For liability in your right hand side, liability increase, you have to go to credit, which is over here. And the date is for October. Okay, what to write here? Because here is purchase, right? So you put purchase here. And then for here, description you haven't filled in yet. So it's Jaden. So this is the answer for this particular exercise, number 6. All right. So let's have a look of the example number 7, which is selling the inventory audit. So now we are doing some sales. On 12th of October, Hui San sell the 700 inventory to credit to Hui Qi. Enter this transaction into a correct double entry account. Okay, so this is sales, no longer a purchase. Let me move from here. Sorry, forget to delete this. Okay. So Hui San is the business, sells the thing to Hui Qi. So it's a sales. And this is selling to Hui Qi on credit. If let's say the sales it happen to immediate payment, which is cash or bank, then you no need to create another account for Hui Qi. But due to this is by credit, so you need to prepare this one. And for this case, Hui Qi owe you money. So which one day will pay you, equal to asset, which is we also call trade receivable. Okay. All right. So for asset increase, right? Increase on when? 12th of October, and then for how much? 700. Okay. And then the other side of account, do the same thing. 700. All right. And then what you need to write, very simple. This one is equals to this one. So, and this one equal to this. Done. So this is the complete answer for example number 7. Now, let's look at the following one, which is purchase return. Okay, just now we do some account for purchase, right? So what happened to this example? On 19th of October, inventory value of 50 previously purchased by Jayden. Okay, let's go back to the Jayden case just now. Okay, all right, and then was returned because it was damaged. Example of exercise, example number 6. Enter this transaction into the double entry account. Okay, from here we can see that earlier I do some purchase from Jayden, right? And this is example number 8. Okay, for Jayden, and then there is a return of 50. So we need to create another account, another T account. Oops. The name of this new T account is return. Okay. So Jayden originally, okay, I purchased from Jayden, but it's 200. Purchase from Jayden is 50, and then now I want to return 50. So it's reduced. Okay. So here it's 50. When it happened on 19th of October. Okay. It's a purchase return. I need to return it. So I open this T account, and then because here is reducing is in the debit, of course it will be in for this side. And then this is 19th of October. And the name is Jayden. And here is purchase. So for this particular example, now the complete answer, it looks like this. Okay, all right. So now let's go to exercise number 9, sales return. Okay, we'll go back to the sales side. Okay, what happened on 28th of October? Hui Qi returned $60 of the goods, which is to her on 12th of October. Because there is 40. Enter this into the double entry account. All right, let's have a look of this case. So for Hui Qi, earlier is 700, and there is a 40, and she want to return back to me, which is 60, and happen when? Happen on 20th of October. Okay, and then we need to create another account for sales return. And because this is in the, so the other side is here. Okay, and then this is Hui Qi because this name equals to this name. And for here, this one is equals to this one. So just put. So for example number 9, the completer, it looks this. Okay. So I think that's all for this particular video. Talk about the purchase sales, purchase return, and also sales return. Thank you very much, and I see you in the next